Good morning. It's Tuesday, December 2nd. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So the rally in the precious metals taking a bit of a breather overnight. Silver snapping this 6-day rally. Really what I'm thinking is where's the support level, where the dip buyer is going to come in. You'll get the silver market up about 83% year to date, reaching an overnight low of 57.22. So retreating from its record high, showing that 6-day rally perhaps pushed in that overbought territory, triggering some profit taken that unfolded. So the metal has rallied about 16% over those 6 days on speculation that the supply squeeze after the inventories in global warehouses had tumbled. So basically what happened was, remember you had that supply squeeze over in London. That's what pushed it up to that all-time high in October. You get China comes in, they fulfill the coffers here, kind of reload that market. India comes in, starts buying again. You see silver futures make a higher low on the charts. What happens is it attracts some ETF investors. And remember those ETFs, they have to be backed by some degree of physical, whatever's in their prospectus. And that's where squeezes take place on physical inventories. Now in the US, there's plenty of silver here. The problem is that the United States, because of the fact that silver is listed as a critical mineral, you are seeing no one really export their silver because they're concerned that Trump would impose a tariff on the silver market and they'd end up having to buy it back here with that tariff tacked on. So that's kind of the story in a nutshell here at the moment. So wagers on the prolonged supply tightness have really fueled that markets and that metal move, with it moving up over 8% within the previous two trading sessions. So you look overnight, down about 2% here, sitting at about 57.94. That's down $1.20 as of this recording. Kind of the middle of the mark here as far as where we opened the overnight session and what the low was. And then you look at the gold market here, down about $45 at 42.28. You do have platinum futures rising off of their worst levels seen overnight when it was down about $50. You got the gold silver ratio sitting just below 73 to 1, sitting at 72.95. So you look at the interest rate expectations here, because this is where we're going to see some volatility take place around that December 10th meeting. So markets are now anticipating the likelihood of an 87.2% chance that the Fed cuts 25 basis points at the December meeting. So you look at the central bank, they are in their external communications blackout period until the day after you get that central bank meeting. You'll get the dollar index up just ever so slightly, 99.43. You got the euro currency sitting at 116.16. That's down about 1. Japanese yen leading the charge a bit lower here, just slightly off after a nice little rally. You get the 10-year treasury yield. So those dipped last week below 4%. We were calling for that. Now we got to move back up to about 4.09% here. So I'm seeing a lot of clients here reload some of their U.S. Treasury call spreads. And then you look at the volatility index for the December futures sitting at 1813, so below 20, as kind of those AI valuations and Fed uncertainty, some of those fears kind of fade away. Now you look at Bitcoin futures recovering a bit here at 87,680. That's up just under about $2,000, or a 2% move here. And it plunged more than 5% on Monday, which saw almost $1 billion in leveraged crypto positions liquidated. Crypto investors here, especially the leveraged retail ones, really piled into those funds that were tracking strategies, volatile stock here. Those are the ones that have paid the heavy price that you're hearing about. So it's the MSTX, the MSTU. They offer double the daily returns. Those have dropped more than 80% this year and are among some of the top 10 worst performing funds here for the entire US ETF market. So from my experience, when you start getting involved with these double and triple leverage longs and shorts, it really becomes a dangerous game. And what traders end up doing is they look at it like these are designed to be one-day bets, but what happens is when you get the market to sell off, they'll say, I'm just going to stay in it one more day, and one more day turns into one more week, and the next thing you know, they're down 80% on this. And unless a sustained bull market takes place here, these are basically unrecoverable, especially from my experience here, when they drop to those low single digits. So what happens is they often become delisted, or with something that has a lot of interest in it, what you'll see is a reverse stock split occurs. Well, they'll drop the leverage short down 5 to 1, and they'll diff the leverage long up 5 to 1, and then that's how they get some kind of medium point in order to reestablish itself and not go through the delisting process. Now you look at the S&P 500, the gamma exposure, because we've really seen a snap back here. And again, those AI valuations, they have faded a bit. There is some relief with Kevin Hassett, most likely going to be the next Fed chairman. So you're seeing that positive gamma take place here where we indicate lower volatility, where the market makers, they got a delta hedge with positive gamma. So they sell the underlying asset as the price rises. They buy it when it falls here, and those actions, they countermeasure the market trend, leading to higher mean reversion and lower overall volatility. Now we go across the pond to Europe and Asia. Well, those European stocks, they edge higher, led by the banks and the utilities. You go to Asian stocks, they gain, snapping a 2-day decline here. Helped really by a tech-heavy rally market in the markets in South Korea and also in Taiwan. So you get the MSCI Asia Pacific Index rising about 0.5% before pairing some of its gains. One data point we'll have, probably won't move the platinum or palladium market, is those Ward's total vehicle sales that's expected throughout the day. And then you go to the ETF flows here. Well, you got ETFs, they increased your gold holdings for the 5th straight day, and they were buying some silver. So you look at the total gold held by ETFs up about 17% this year at 97.7 million ounces. That's the highest level since October 27th. It was also the biggest one-day increase since October 21st, and the 5th straight day of growth here with the longest winning streak since October 21st. So a lot of little records here taking place in the ETF flows in that gold market. And then you go to silver here. Well, they added about 1.43 million ounces here. So it's a nice big boost as well into those ETFs in gold and silver. And the gold silver ratio, again, back below 73-1. So really next major support area is going to be somewhere in the 55 to 54.50 area. Below that, maybe the 52, and then below that from 50 to 47. I think that long-term dip buyers would really emerge, and that would be a place where we would look at perhaps some heavy interest in the silver market. So one thing that I know, after doing this for 25 years, I get more people that are interested in adding silver when it is near its highs here. And those are really the chasers in the market that are coming in, rather than the dip buyers in a structural long-term bull market. So you are looking at adding to some of those dips, selling some of those positions when you get to where that fear and greed index is throttling full out in the silver market. That's really when you want to let some of that product go, in my opinion. So you guys got any questions? You want to open up a futures trading account? We do have a little bit of dip buying going on here at the moment. We've got some great action and a lot of other commodities out there. So if you have any questions, shoot an email to info@bluelinefutures.com. And remember that futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.